Hey everybody, my name is Paul Vojchehoske and welcome to the Real Estate Classroom YouTube channel. In this video, we're going to discuss trust accounts. It is something that you as a real estate student studying for your real estate exam, absolutely you have to know what they are, and there are some particular things about trust accounts you just have to know. So, let's talk about trust accounts. All right, so in this video, we're going to discuss trust accounts. Now, trust accounts is something that you as a student studying for your real estate licensing exam, you have to know, especially you broker candidates, okay? But quite frankly, as a real estate professional, you're going to have to know about trust accounts anyways, because we do deal with them on a daily basis in our profession. But before we get to trust accounts and what you need to know, do me a favor, if you would, give this video a thumbs up. Subscribe to the channel, hit that little red subscribe button, click on the notification bell. And you know what? If you have not, if you have questions or comments, please put them down below in the comment section. We love comments. All right, so trust accounts. A couple of key terms you have to know. Trust account and then earnest money. Now, earnest money we've already talked about in a previous video, so I'm not going to get into the details of that. But trust account, what is it? Well, here's the legal definition. A trust account is a legal arrangement through which funds or assets are held by a third party called a trustee for the benefit of another party called the beneficiary. So if I were to put that in layman's terms, here's what I would tell you. A trust account is an account such as a checking account at a financial institution within the state in which the broker is doing business, where money that belongs to other people is deposited into when it comes into the possession of the broker. So a buyer gives the broker or the broker's agent earnest money as part of a purchase contract. That earnest money will be deposited into the trust account. If a tenant pays the monthly rent and gives that rent money or that rent check to the broker, that broker is going to deposit it into the broker's trust account. Think about it. The rent money is not the broker's. The earnest money is not the broker's, but the broker has to account for it, and that's why we have trust accounts. So that's the definition. All right, so let's talk about the specific requirements for trust accounts and things that you have to know for the real estate exam. Number one, every designated broker must have at least one trust account. Now, they typically can have more than one, and in a few states, it's actually required that they have more than one, depending on the sales activities or the real estate activities that they do. But what you need to know is there's only one designated broker per company. Now, that designated broker could have associate brokers that work underneath them. There can be managing brokers. There can be branch manager brokers, but there's only one designated broker. And at a minimum, every designated broker must have one trust account. As I said, there are some states, you don't have to know this, but some states require the broker to have a trust account, for example, for their sales division, and then another trust account for property management. But what you need to know is one designated broker, one trust account. And very important, that trust account must be at a bank or other financial institution that's located within the geographical boundaries of where the real estate company or that broker is doing business. Very important. Number two, what is the purpose of trust accounts? You have to know this. It is for other people's money that comes into the broker's possession. For example, earnest money, rent money, security deposits, monies that's taken in advance to pay expenses, and down payments, the buyer's down payments, for example. Those monies belong to other people. And so once they come into that possession of the broker, it has to be put into the trust account. And it has to remain in that trust account until that transaction is consummated, meaning it was closed, or it was terminated, or by mutual agreement, by mutual written agreement of the parties to the contract. So let's kind of work through that. Number one, Look at monies advanced to pay expenses. I discussed that. What does that mean? Well, for example, let's say it's a commercial broker and they are managing a huge commercial retail outlet for an owner. There could be literally tens of thousands of dollars in marketing and advertising that the broker is going to have to utilize to get tenants. The owners typically pay that. So the owner will deposit $10, $20, $30, $50,000 into that broker's trust account so the broker can use it to pay for that advertising. So it's other people's money, it's the owner's money, but they are authorizing the broker to use it for advertising and marketing, and there's going to be a paper trail to ensure that it was, used for what its intended purpose is. But that's what we mean by money advanced to pay expenses. All right, so the other thing is I do want to talk about just briefly when is a broker owed money. So maybe there is $10,000 that's deposited into that trust account that eventually at a future date when the transaction is closed, the broker gets $2,000 in commission. We know that the broker is entitled to $2,000 at a future date, but not today. So the broker can't touch that. Now, once that deal closes, then the broker can legally take out the $2,000 that's entitled to them, and then the other $8,000 is dispersed as according to the terms of the contract. So that's an example of when it's consummated or closed. Another scenario may be that same $10,000 is there, that broker is owed that $2,000 if it closes, but maybe there's a termination agreement between the client and the broker that says if the deal is terminated for this reason or that reason, then we still get some or all of that $2,000. So when that contract has been terminated, then the broker could legally take whatever they're entitled to out of that money. Or written consent. Sometimes for whatever reason, I can't think of anything off the top of my head, but maybe for whatever reason. Oh, I got an example that actually happened. So there was a broker that was setting on about $50,000 in a trust account for money advanced to pay other expenses. This was a case where the broker had deposited $50,000 for property management services. Well, the owner who had a management contract with that designated broker wanted to purchase another property, and so they authorized in writing for the broker to take $10,000 of that $50,000 and transfer it over for the earnest deposit for that property. Again, the broker had to have written consent from the person that owned that money. It was party to the contract. So that's an example. All right. Number 3, parties involved in the transaction may agree in writing to other arrangements. Doesn't happen often, but here's an example. In most states, the trust account is non-interest bearing. So let's say that it's a huge development project, and the owner or the principal in that transaction deposits $50 million as a down payment into that broker trust account. Now that's $50 million, not making any interest. Oh, and by the way, the closing is 12 or 18 months out, which is really not uncommon. So $50 million over 18 months making zero interest is not okay. So sometimes what will happen is the buyer and the seller will agree in writing for the broker to open up a savings account or a money marketing account to put that $50 million into. So, that person that deposited the $50 million can get interest. It's not common, but that is a method or a way to do that for those larger deposits. But again, all parties to the contract have to agree to it. Number 4, most trust accounts can be interest-bearing or non-interest-bearing, and that solely depends on the state in which the trust account is in. Number 5, in every state, there is a process for the regulatory body, the government regulatory body. Most of the time, it's the Real Estate Commission, or maybe they call it the Department of Professional Licensing. Here in Nebraska, for example, where I'm at, the Nebraska Real Estate Commission will audit that trust account at least once a year. They may do it more than once a year, depending on the size and the number of transactions that firm does, but at least once a year. And if they find that that trust account is not satisfactory and there's been some things that the broker wasn't doing right, then that governing body, in fact, they could revoke the broker's license or censure the license if that governing body has definitively determined through due process that they indeed did violate some law or some policy or regulation. One thing I do want to point out with that, very important. If a trust account is found to not be in the way it's supposed to be, so they were doing illegal transactions, or the broker was pulling money out when they shouldn't have, those type of things, that account is that broker is what we call in jeopardy. But the governing body, no matter what state you're in, no matter what, they can't just automatically revoke a license or censure the broker. There has to be a mechanism for due process. Here in Nebraska, we have what's called the Nebraska Real Estate Commission. So the auditor will find that the trust account's in unsatisfactory condition. They'll file a report with the Nebraska Real Estate Commission. The Nebraska Real Estate Commission then will press charges, if you will, or bring a complaint against that broker. Then the broker has a right to have a hearing and a trial and everything else in front of the actual Nebraska Real Estate Commission. It's never automatic. Due process must happen before any kind of punitive things can happen. And the reason I bring that up, because sometimes the real estate exam likes to use words like automatically revoke, those type of things, and it's never automatic. There has to be that due process. I know it's kind of a long sidebar, but I really wanted you to know that. And then number 6, it's shielded from any creditors of the broker. It makes sense. Think about this. The trust account is for other people's money. So if the broker is getting sued, or the broker has judgments against them, or the broker is filing bankruptcy, those creditors should not have access to that trust account money, because it's not the broker's money. It's just not the broker's money. So those are 6 things you definitely need to know. Last thing, please, keys to remember, very important. Number 1, trust accounts are for other people's money that comes into the possession of the broker. Number 2, brokers cannot in any way commingle funds, none. They can't put their general operating funds in with the trust account. The trust account is only for other people's money. And number 3 is the broker can't take money out of that account until they're legally entitled to that money, which means they can't take it out until the deal's been the transaction has been consummated, terminated, or there's some other written consent that's been given by the parties. Now, last thing before I let you go, please remember this. Trust accounts are for other people's monies. You can't commingle funds, and the funds have to remain there until the deal is consummated, terminated, or written consent is given by parties to the contract of other arrangements. Very important that you remember that. All right, thanks for joining me today for this video. If you're going to continue studying, check out this video right here. If you have not subscribed to the channel, please do so. Click the little circle. I'd appreciate that. Comments, questions down below in the comments section, and share this with somebody. I'd appreciate it. All right, I'll see you in the next video.